Right, time for today's Bart Chart. How high can Chinese stocks go? If you listen to Mark Mobius, who of course is the executive chairman of Templeton Emerging Markets Group, he's been investing in emerging markets for the best part of 4 decades. He says the bull market in Chinese stocks is just getting started. And it was Mobius's words that inspired today's Bart Chart. Check out the chart. This is the benchmark, the Shanghai Composite in 2014. And this year, it's risen by 39%. The most since 2009. In the last month alone, the index has gained 19%. The Chinese central bank unexpectedly cut interest rates. Mainland investors opening new stock accounts at the fastest pace in 5 years. Only Venezuela's benchmark stock index has risen more in the last month out of 93 global indices. Now, the high for the year was reached on Monday. Have a look here where my pencil is pointing, my pen is pointing. That was when the index surpassed 3,000 for the first time in 3 years. The index finished on Monday at 3,020. That's the highest since April 2011. Now, what's interesting is this, and this is the stat that really matters. The index's 51% jump from a 4-year low in June 2013 is still less than half the average 122% gain during 26 bull markets since 1990. So if you're a believer in history, this market could have further to go. Be aware of volatility, though, on the gauge. On Tuesday, the Shanghai Composite Index, that fall right there, it fell by 5%. Biggest one-day tumble since 2009. China stepping up efforts to curb the expansion of opaque local government debt. Also, a measure of 10-day prices swings reached the highest level since 2009 on Wednesday. Don't let that put you off, though, says Mobius. He says increased volatility is creating opportunities to buy mispriced shares. He isn't alone in heralding Chinese stocks. Morgan Stanley's Jonathan Garner said on December the 2nd there's potential for an ultra-bull rally where prices double in 18 months. There are naysayers, though. Ken Peng, he's a strategist at Citigroup's private bank in Hong Kong. He says the rally is irrational, and very quickly Andy Xi, a former World Bank economist, he called the advance a bubble driven by leveraged traders. I'll let you decide.